have mortgage professional Jacqueline.a.weir with us, and she's from the Canuck Mortgage Group. Hi, Jacqueline. Thanks for joining me this morning.
Good morning. How are you?
Good morning. Good. We got past our technical issues there, so.
Yes.
Yeah, so thanks for your patience. So
no problem.
Today we're going to kind of focus a little bit on why people should be using you, a mortgage lender, as opposed to going to the bank. So do you want to just dive right in?
Yeah, so I'll give a little history on myself.
Yeah.
Canuck Mortgage Group is a family-owned. We're DLC Canuck Mortgage Group, family-owned brokerage. That's my dad, my principal broker, and then me and my mom as well. He's been in the industry for over 30 years. I've been in the industry for 10 years, licensed as an agent for 3. So if there's anything I can't answer, like he's literally that wall behind me.
Yeah, for sure.
I can ask him if I don't know the answer. But the benefit of a mortgage broker agent over your bank is literally just availability and product selection. Your bank, let's say TD, can only offer you what they have. So their 30-year amortization mortgage, their 25-year amortization mortgage, and the insured and insurable buckets, and the uninsured, as well as the 5-year fixed or variable. Whereas I have access to 35 plus different lenders in the A space, the B space, and the private space that opens up a world of opportunities for homeowners.
Jacqueline, can you do me a favor and explain to the public, because they might not understand the A space, the B space, and just kind of a brief overview?
So in the A space, that's your TD, your Scotia. We also have what are called monolines. So they just deal in mortgages, as well as credit unions and trust companies. Mm-hmm. They do everyone under the sun, first-time new homeowners, new to Canada, refinances, renewing your mortgage, anyone with a credit score of 680 plus, that's where you're going to be.
Okay, so that's good. 680 and up is good.
Yes.
Perfect. So hear that, everybody? Work toward that at minimum. But anyway, okay. So
the alternative, the B, so that's if you're self-employed and on your T4s, we may not be showing what's actually going through the bank account. So we can go based on your bank statements. If you haven't paid out your taxes, we can get you up to date, refinance your mortgage, pay your taxes. If you have a little bit of what is bruised credit, so below that 680, or you're struggling, we can help you in. You could be there for maybe a year or so, get your credit back up to where it needs to be, and then we transfer you over to the A side. And then private is just, no credit score, no documentation really required. We do look at the value of the property, but it's more an interest-only mortgage. You're not making any principal payments and bringing down that balance.
So when would somebody kind of use that last scenario that you were just discussing? Because it doesn't sound like the most opportune thing when you're not knocking down the principal on your mortgage, but people do it now and then. So what would be an example of why someone would?
So that could be like a really, really low credit score. Gotcha. And we're going to have to put you there because we can't get you into the alternative space. And that could just be a year or 6 months, what it takes to get your credit score back up. It could even be a construction mortgage. So it doesn't even necessarily depend on your credit score. It could just be that you're trying to build a property. You already own land. Our alternative and prime lenders don't necessarily do that. So you'll be in the private for a year or two, how long it takes you to finish the construction. And then the exit strategy is we put you with TD, a Scotia, or First National, which is one of our monolines, CMLS, Meridian Credit Union, so on and so forth.
Awesome. Okay, so thanks for explaining that.
No problem.
And so a B lender, let's say an A lender versus a B lender in terms of interest. So somebody's self-employed, and obviously the numbers are a little different when you're self-employed.
Of course.
Yeah, your earnings on paper, so to speak, right? So what would an A lender be doing, I don't know, a 5-year closed at, and does a B lender even do a 5-year closed?
When you're going in the alternative, I would never do more than, let's say, 2 years. At this rate right now, I'm doing like a 1 or 2 year term because we are looking at, how the rates are trending. We are seeing that they are coming down. So if you're on the alternative space and you're self-employed, you're most likely going to be there for the life of mortgages because of how you're reporting income. The more income you report, the better it is. We can put you on the A side. It's just more taxes you're paying to the government. It's all in whatever you want to do, honestly. But looking at a 5-year fixed rate right now, if you were a first-time home buyer, I'm just pulling it really quickly, we're looking 509 for first-time home buyers. If you're in the uninsured, we're at 559. So a little bit different, but not too bad.
So what is the uninsured? I know what it is, but I want you.
So uninsured is if your property value is over $1 million, or you need the 30-year amortization to help you qualify better with the bank. It doesn't necessarily go to the property value at that point. It's just all in how you qualify better and can get into owning your home and getting that mortgage.
So what are the advantages? I'm a first-time home buyer. I've got my 10% down from the bank of mom and dad. And I want to go out shopping for a home, but my realtors told me that I need my pre-approval before she wants to begin showing homes and even getting in her car, right? Because she wants to make sure they can get approved. So,
that pre-approval, first of all, is like the number one step to do, because it lets you, as a homeowner, know how much you can qualify for in-house. And it also helps your real estate agent so that they're not showing you too big of house. So if you only qualify for $900,000 and you're looking at a $1.2 million house, it's going to be definitely a requirement of more down payment, because over $1 million, you need a down payment of 20%. Your mom and dad are probably going to have to go on and help you for qualifying. So it just helps you with peace of mind house hunting, so that you're not looking over and above what your budget should be.
Kind of like the champagne taste on a beer budget scenario.
Exactly.
Right? So we want to make sure that we're not out, showing the champagne, etc., only to learn later on that, when you're a first-time home buyer, it's tough, right? So
and the benefit of working with a mortgage agent versus the bank, I'm here for you outside of that 9 to 5 hours. I am meeting with my clients at 9:30 at night via Zoom if they want to. I've done a 10 o'clock. It's all to what is comfortable for you, and you're not rushing that, I need to get my documents to the bank before 4 o'clock Monday to Saturday because they're closed on Sunday and my guy's not there on the weekend. But then it's also to, if you're doing your purchase today, 4 years down the line, you go back at the bank, you're not dealing with John anymore, you're dealing with Caitlin because she's the renewal specialist. Or John doesn't even work at the bank anymore. It's now Crystal working at the bank. So you're not going to have potentially that same person always working on your file. When you work with an agent, me or anyone else, it's that agent for the life of your mortgage, for the life of your real estate portfolio. We're not going anywhere. And
which is nice.
I'm not saying that the bank doesn't work to the benefit of the client, because they definitely are going to do what's best for the client with the products that they have. But I look at the client's full portfolio and take an in-depth interview with them, and I look through all of my lenders and find who has the best for them. Because I don't just
scenario that they're in.
Exactly.
Yeah.
A client can tell me that they're looking for the lowest rate. They're looking for the lowest rate as of today. I don't only look at the rate going into the mortgage, I look at the rate coming out of the mortgage. So if you had to break let's say you take a 5-year fixed rate now, but then rates are going down. So 2 years, 3 years down the road, you want to break that mortgage, refinance, get a lower rate. Well, I'm not going to look at, oh, okay, we can get you 509 today. But what does that rate 509 look like if you have to break the mortgage? It might have like TD and Scotia and some of them. There are penalties, but it's all in how the penalty is calculated. So TD and Scotia have what is called a posted rate. So let's say the posted rate was 6.79 and then you're getting 5.59. So they look at the discount between those rates, how many months is remaining, multiply all of that, and you get your penalty. We saw during COVID homeowners having penalties of over $40,000 that they had to sell their house.
Wow. That's crazy.
It's really crazy. So I don't only look at one rate, I look at your going out rate. So a difference in that would exactly, because I'm making sure you're not just going to go into this house and you're done. I'm going to look at, okay, you're a new couple and you're buying a 1-bedroom condo, but you want a 5-year fixed rate.
Baby.
2 years down the line, you have a baby. Where's that baby going to live?
Exactly.
So we're going to look at like, okay, maybe don't do a 5-year right now. Let's do a 3-year. That way, if you did have to break it, you're thinking about starting a family, you're going to have to move. That baby's not going in that 1-bedroom condo.
That's right.
For very long.
And let's face it, like people's life circumstances change. You know,
exactly.
You get a great job offer in New Brunswick. You need to sell. You don't want it to be penalized $40,000 on the property, especially, you know, I mean, you don't want it to happen anytime, but especially when you're a first-time home buyer, because your margins are smaller. You've only been in the home first year. You didn't put down a substantial down payment, probably. So that could eat up all your you could end up owning the bank at the end of the day, really. I mean,
we try not to put you in an unsuitable mortgage. I'm only going to speak my brokerage. I don't speak bad about any others, but we hear horror stories. We go to conferences, you hear the horror stories of what's happening to other homeowners, and you're like, wow, my heart bleeds for you. But when you're working with me or any of the agents in my brokerage, we're making sure that you're going into this home, and in 3 months, you're not being kicked out of that home. In a year, you're not going to be kicked out. You're there for as long as you want to be there. And we're going to walk you through all of that. That if you do have a little bit of a poor credit or a situation that right now it may be better to rent, we're going to work with you. And I give all of my clients, there it is, the first time homebuyer step-by-step guide from CMHC, which gets them ready for home ownership. And that can be first time homebuyers, new to Canada homebuyers, or homebuyers that are currently renting, have a little bit of poorer credit, and we work together to get your credit to where it needs to be. And even in terms of how to save up that down payment, getting a high interest savings bank account that doesn't have you paying fees, but is feeding you good interest. Like I have a savings account with Equitable Bank, and I get, I think, like 2.5% on my savings.
Nice.
I know TD offers like 0.0014. It's really low. So we go through that education. It's not just a one-stop shop. I mean, it is a one-stop shop, but like it's a fully rounded education. Mm-hmm.
Yeah, and it's really good because, like you know, we were discussing earlier, like every buyer or, you know, whoever it is, everybody has their unique situation scenario. And so it sounds like you really take the time to kind of get to learn about, you know, if they're self-employed, you know, what can we do from there? And remember that in 4 years when they do call you again, when the mortgage, or 3 years or whatever,
I keep
mortgage renewal.
Very, very detailed notes. Like I have a notebook just for my own client deals where everything under the sun that they've told me, I'm writing that down. That I've had a client that we bought a house 2 years ago. Yeah. They called me just recently to say, hey, you know, we want to sell the house. And I'm like, okay, we just renewed your mortgage.
Oh, no.
And this isn't a portable mortgage. So this should have been part of the conversation up front that you guys wanted to move. I'm like, well, we'll keep looking at it. I go, your penalty is going to be really high right now. So right now is not the best time. But let's revisit this in like a year or so, because it's like a 2 or 3 year mortgage that we did.
Right.
But it's like, let's look at it next year when the penalty is going to decrease. And I'm going to guide you through that, because right now house values have really dropped. So we're waiting for the market to come back to where it is so that they're not losing the equity that has gained in the house and selling it for less than they should.
And I think, you know, like your whole strategy and refinancing them would have been completely different had they been transparent and said, hey, Jacqueline, you know, we're kind of just sitting on the fence that we might want to sell in the next year or 6 months.
It's
and you
funny
would have
because
done something different, right?
It was funny because they're like, oh, we want to go for a 5-year fixed. And I'm like, you guys are on the alternative side. I know this is where we're going to live for like ever. I go, but 5 years, I'm not doing that. I go, the max I will let you go into is 2 years. And then when we had that call, I'm like, aren't you glad you're not in a 5? And they're like, yeah, you know what? We're glad you guided us in that direction. I'm like, because your penalty would have been, let's say, like $30,000. Right now, it's only 10. Not even like that rate. It's just the penalty, because on the alternative side, penalties are much higher
when you lock in.
Yeah.
So unless you're pretty clear that this is for sure, you know, I mean, nothing is, you know, written in stone, of course.
No,
you have to have a pretty clear.
I won't do more than 2 or 3 because anything can happen, and to hit you with those penalties, it's not fair. I'm basically available. I'm basically available 24/7. I mean, my clients can email me at 3 in the morning. I probably won't answer at 3 in the morning, but I will answer when I wake up.
Yeah. At like 7 a.m. or 8
Exactly. Yeah. I'll answer then. You can reach me phone, email, text, call, like any way that you want to try to reach out to me. I'm very responsive. If I happen to be in a meeting, the one really great benefit is that because I learned from my dad and I work with my dad, he can take over the file if need be while I'm in a meeting, just answer, get access to it, help the client if it needs. I help if he's in a meeting, answer his calls, help the clients as they need. Or if we're both in a meeting, there's my mom at the front, our VP administrative. She takes the phones, can't get into the file, but she'll help them as much as she can.
Yeah.
And I'll call you back immediately after I get out of that meeting.
I think that that's really important too, because we have to remember, like, when you're buying a home, this is huge. This is probably the largest investment you're ever going to make. It's the biggest
purchase you will ever make. Yeah. Like, these are $1 million, essentially,
even if
purchases.
It's a $500,000 home,
which it could become $1 million.
Yeah, there's not. It will, and it's to them. It's a big deal, right? Like I always say to Chastity, who works with me, I say it doesn't matter whether they're buying a $500,000 home or a $2.5 million home. Everybody, this is a big deal to people, and everybody deserves the exact same treatment, etc. Right? So
yeah, you're not a client when you're working with me. You're family. You're a friend. Like, I take you in and I treat you as my kin, and I will become like very blunt and get real with you and be like, let's come back down to earth. Right. If I need to, and just like give you that shake and be like, hey, let's get on page and let's get on the same page so that you know what I'm talking about. I know what you're all about. I even follow up with my clients. Like, I just actually went to see one and they're like, oh yeah, our furnace broke. I'm like, did you guys ever cancel? So a couple of our lenders give free home warranty for the first year of your mortgage. Nice. Like, sorry. So you get a free home warranty, and that covers your furnace, your AC, the plumbing, a lot of stuff. So if you've got like a 25-year-old home and the furnace is there from day one, it poops out, they come in up to $10,000, repair it. You just have to pay, like, I think it's a $50 service call fee, and that's it.
What a
that
relief.
that is a lot of money back in your pocket if you ever had to call for AC or furnace repair.
Especially, you know, your first or second year in the home. I mean, you're just, you know, adapting to all of those costs, etc. So to have, you know, a big expenditure like that come along, it's a hard hit to take.
So I dropped in and I was just like, hey, how's everything going? What's up? And they're like, oh yeah, our furnace just like died. We had to call Enbridge, sign up, and they came to fix it. I'm like, did you ever cancel the home warranty that you got? Like, you're in the second year. They're like, no. Would that have done it? I'm like, oh, guys, like, get on the phone and start calling.
So did they get it covered?
I think they got the money back.
Oh, good.
But, like,
yeah,
they had 2 home warranties now for the furnace and AC.
Wow.
And this coverage is really great because we had a client move into a home in the summer. The following day, right after they moved in, AC cut out.
Oh, my gosh.
We made a call to the lender, hey, we need to enact the warranty. They're like, what do you mean? Like, they just moved in. They're not even fully enrolled. We're like, yeah, the AC died. Next day, they were out, repaired the AC. Clients weren't even being done enrolled because the mortgage had just funded.
Wow. Okay, that's amazing. So, is that with like a vast number of lenders?
So
or
it's on the prime side. It unfortunately doesn't apply to condos because we can't do the whole condo building.
Sure.
But townhouses, semi-detached, fully detached, we can do
Freehold.
those. Yeah, freehold. Even the leasehold townhouses.
Okay. You can do it.
Get it.
Perfect.
And it's with like our partners that are on the A side, TD and Scotia not included, but we've got quite a few that do offer it. Some are 6 months, some are a year, but you get a free warranty, and it's a lot cheaper than paying Enbridge.
Right.
For example.
Right. Yes, exactly. Okay, so is there anything else that you can think of that you kind of want to share today before we wrap things up? You've been super informative. I love it. And Jacqueline's information is all going to be linked below here, so you can reach out to her via telephone, text, email. And
I would add that it doesn't cost anything to work with a mortgage agent. Our services are relatively free, unless you do go on the alternative or the private side. We don't get paid for that, so that's when there would be a fee associated. But other than that, I mean, services are free. It costs nothing to make a phone call and have a consultation to review your situation or even get a pre-approval. I don't get paid unless a mortgage funds, so my time is free until we fund your mortgage.
Exactly. And I think that's great too. Like sometimes, you know, just to know that you can pick up the phone, ask some questions. You know, there's not the pressure to get started with an application right away because maybe they're 2 months out. Who knows? But just because knowledge is power, right? I mean,
if you're purchasing a home, we can hold a rate for up to 120 days. And if you're refinancing, we can hold for up to 90 days.
I love it. I love it.
So you can lock in a rate today, and it would be held until 4 months from now.
Yeah. And you have to...
I think that's like July.
Yeah. So that's perfect, right?
Of course.
But if the rates go down during that 4 month window...
Definitely we lower the rate as well. You get the lower rate all the time.
Yeah. But if they go up during the 4 months, you are
stay at the... Yeah. Exactly.
And I think that there is a preconceived idea in the public's eye, at least from what I've experienced throughout the years, that you have to pay mortgage brokers. And I always say, no, just, you know, make the call. It's covered. The lender actually
pays us unless we're private or alternative.
And it's basically like you're out there shopping and Jacqueline will send it out there to whatever.
It saves you money and it saves you time because let's say you went to TD, got declined. Then you go to Scotia, you get declined. You go to CIBC, you get declined. Each time you've gone to a different bank, they've pulled your credit score. I take one credit bureau and I can shop the 35 lenders. I'm not going to send it to all 35 at once, but I'm going to look at the client's portfolio profile and compare it to each lender and say, okay, these are the top 3, and this is why I think this would be number 1, here's 2, here's 3. And then the client has an informed decision as to why. But if they say, hey, I bank with Scotia, I'd like to go to Scotia, I can do that. We can go to Scotia, we can review your options. If you bank with TD, we can go to TD. We even have BMO in our space. The only 2 that don't deal with mortgage agents is CIBC and RBC.
Okay. Well, you have lots of choice for them anyway, which is fantastic, and educating them. And no, it doesn't cost you money to call Jacqueline and get some information from her. So once again, her info is all going to be linked below. Jacqueline Weir from the Canuck Mortgage Group. But before we go, I have 5 fun facts about you. Questions in 5 seconds or less. Okay. All right. Your go-to karaoke song. What would it be?
Shania Twain, Man, I Feel Like a Woman.
Love it. Classic. If you could only eat one food for the rest of your life, what would it be?
Tiramisu.
Yum. Okay, sounds good. Favorite animal?
Dogs.
Yeah, me too. What was your favorite subject in school?
English and writing. I almost became a journalist.
Oh, really?
And I was going to go into journalism, then I graduated for public relations and event planning, and I'm now in mortgages.
And now here you are. Life takes funny turns sometimes, right? And lastly, what was your first car?
A GMC Jimmy.
GMC Jimmy, awesome.
I think it was 2001.
Was it? 2001. Jacqueline, thank you so much for taking the time just to, share this information for the public. And it's super important. There's, a lot of people out there that are it's an overwhelming process, let's face it, right? Especially for first-time home buyers. And I guess that you have a lot of repeat clients who are refinancing, et cetera, with you.
This is the biggest year for refinancing, getting lower rates, because anyone that did come up for renewals from 2018, 2019, some of those 2020s, they're all coming up. So there's going to be a little bit of rate shock. I'm already mitigating that with calling my clients well in advance to say, hey, you've got a mortgage coming up for renewal this year.
Yeah.
Let's discuss the little bit of rate shock that you're going to experience.
I love that. I love that you're
So I'm here for you every step of the way, and you're never going to be lost.
Perfect. Thank you so much, Jacqueline.
No
I appreciate
problem.
your time, and I wish you a great day. And, of course, we'll be in touch in the near future.
Definitely.
See you later. Have a great day.